Hi, good afternoon. Ross McInnes from Australian Investment Research Services. Thanks for joining us. More stable day in Asian and Australian equity markets today after the sell-off late yesterday, which was caused by US S&P 500 futures falling away to six-month lows at 1,040. As we mentioned in the morning report, the S&P 500 index itself did open down at those six-month lows at 1,040. But in part due to better than expected consumer confidence numbers, the index found its way into a fairly good rally into the close to be basically unchanged this morning at 1,073, and this set up a reasonably good bounce through the Asian time zone. The ASX S&P 200 index finished up just over 1% at 4307. It did jump all the way up to 4365 with in respect of that 4400 overhead, but it did come back in the afternoon again due to the ongoing uncertainties that we're seeing in Europe and also just to a lesser degree the US at the moment. We've just watched the OECD presentation from Paris. They released their latest number 87 economic outlook, and it was a fairly relaxed presentation in terms of what they're seeing. Although they admit there's obviously more risks now with fiscal stability, they did talk up the fact that most of Europe had now responded to the pressures, with Italy, Portugal, Spain, the UK, and Germany all looking to bring their deficits back into line with more acceptable levels. And obviously the key focus is now to watch the progress of that fiscal stability. Overall, the OECD presented a reasonably upbeat outlook for the world economy over the next 2 years. 2.8% growth this year and 2.8% into 2011. But obviously the Eurozone is going to be lagging with growth of 1.2% this year and 1.8% into next year. In this respect, they suggested that monetary policy in Europe would probably be supportive, given it's at 1% at the present time versus a Fed funds rate of basically 0 and 0.125%, in Japan of 0.1%, in Australia with its six tightenings up around 4.5%. But overall, the OECD wasn't too concerned about what's happened in the last month. As I mentioned already, they really kept pushing the fact that there had been a response by the European governments and that eventually this would be a long-term growth driver for the Eurozone. They also weren't too concerned about the euro-dollar falling away nearly 8% this month against the US dollar, seeing it as a potential support for Eurozone growth. And the biggest concern continues to be the fact that unemployment is going to be slow to recover, which was just repeated by the Italian Statistics Society that came out and suggested that last night's Italian fiscal stability package would constrain consumer demand. So clearly we've got a period of 6 to 12 months where the incoming Eurozone data is going to be very closely watched to see if it is going back into recession or is going to be more benign and record modest growth as per the OECD forecast. The Australian dollar also reflecting this increased stability we've had in the last 48 hours after that sell-off last night. The Aussie getting up around 83.18 during that OECD presentation because it was fairly upbeat on Australia, agreeing with the RBA in the budget forecasts that we're going to see above trend growth both in 2010 and 2011. The A dollar trading up to 83.18 at one point, but it's back down to 82.70. Low on the day was 81.80 mid-morning, and we still expect to see some buy stops go off above 83.50, given that's where the market's been sort of got short in the last week or so, when the sell-off really got legs last week. Clearly, though, for this to occur, we probably need the S&P 500 to get above 1,080, which has been the pivot point over the last 10 days. And in these terms, we've got US durable goods numbers and some US new home sales coming out tonight, which are generally secondary numbers, but the market's looking for any information it can get. And overall, the big news is going to be next Friday night when the US payrolls numbers come out to see whether there has been continued employment growth, which supported the confidence numbers this morning. Excuse me. And so again, as we've had since we started our presentations last Thursday, medium-term valuations look okay, but clearly we have increased risks and volatility present, and it's too early to say that that's all over. But as we mentioned, big levels to watch tonight: 4,400 on the SPY and 83.50 in the Australian dollar on the upside. So thanks for your support, and we'll speak tomorrow morning. Bye bye.